So, good morning, active traders. It's been a hot market lately, right? We've got so much volatility to work with. Welcome to our Win with Ken episode. We're looking at real trades I did. As always, all information is for educational use only and not making advice about what to buy, sell, or hold. And by watching this, agree to not make actual trades. I've done as much as 4.9 million worth of trades in a single year. So, been there, done that, got the t-shirt. Main idea for this week is I want you folks to start giving thought to intraday swing trading, and that's where you put on the trade between 9:30 and 10 and close it out either at lunch on a lunch pivot or into the close between 3:30 and 4. That's a strategy I've been using, and I wanted to get you up to speed on that. But let's jump into it already. Let's take a look at our market and some charts worth trading. The S&P has been on a downtick. If you look at the 90-day, I was buying some inverse ETFs into the close yesterday afternoon because this looks ugly, right? Mostly red candles. We're hugging just under, or just close it, I should say, just over the 200 SMA. And the fact that we pierced and penetrated the 200 simple moving average support line gives us reason to be bearish in the stock market. So we really want to look at charts that have great volatility. Let's take a look. Actually, I'm doing so much day trading lately. Let's take a look at some volatile charts. This is a 2-day chart. Here's YNDX. Real money trade I did yesterday just to get started on a swing. P&L proof. I bought this puppy at just 20 shares, a little baby trade. Isn't that cute? A little $550 worth of capital. But that's my edge at 25.66. So I bought here right near the exact bottom, ahead of the hammer, right? Or I should say is part of the whole real body of the hammer. Anyway, a hammer low, hammered out a bottom, and sure enough, it did a swang recovery. Now my goal is to get this up, as with all my swing trades, 100 to 300 shares by the time I scale in or position size in. But you start off with minimal risk. So if the trade screws me and gaps down and goes to 24 come Monday morning, it's only going to be 20 shares times a few points, not 300 shares times a few points. That's my edge as a trader. As Sosnov would say, trade small, trade often. I trade wide, not deep. Okay. Something I emailed out to everybody this morning is proof. I did 188 trades the last 3 weeks alone. The last 15 trading sessions, an average of over 10 trades per day, generating 930 worth of commissions for my friends at Fidelity, so you're welcome. But it's not over trading if you're doing well as a trader. And if you're successful, odds are you folks may be under trading. So one of the things that I encourage you to do is, trade frequently and look for great charts that make sense. You can look on this. I'm not going to go through this. It's on my Twitter feed at twitter.com/Ken Calhoun. But you can see examples of real money trades I'm in. What I want to do right now is go through the charts. So let us do so. And feel like we're like Indiana Jones in the Temple of Doom or something. It's quite a wild, woolly market, and it's a perfect time if you're an active trader, either day trader or a swing trader. When the markets are super volatile, the day trader in me comes out, and I start day trading the markets more aggressively. Because look at these patterns. Here's Momo. That looks like a butt ugly chart, right? This guy ran from 45 down to 30, but yet I bought a little bit into the close yesterday because I think it may be a bit overdone and it may do a bounce. Just like I thought American Airlines was a bit overdone and correctly bought the bounce in AAL. Other charts you may want to keep an eye on. And we'll look at this in the week ahead regular broadcast. But for small cap, Fred is one of my small cap scans picks for my small cap scans members, and that's been a spectacular uptrender going from 2 to over 3 a share in the last couple of weeks. So that's a good example of a steady uptrender in a market that's going bonkers, right? Other charts, IGC went from a high of 15 to a low of 3, and yet I bought a little bit into the close. Sure, maybe it screws me and gaps down to 2 or something. I think I'm only in 100 shares or something. It's not going to cost me that much. But if it comes to life, I will scale in. A smarter place to trade this would be above previous resistance, a minimum above the 2-day high, above 450. But look at the upside potential, right? Here's one that got halted yesterday. PLAG. I was not trading this. I was waiting for it to see if it opened, say down here, gap down, and then started to bounce. I was going to trade it there, but it didn't open again. But do keep an eye on that one. PLAG. I have no freaking idea what company this is. I have no idea why it went up. I don't care. More buyers than sellers. We got a volatility halt. Worth keeping a shot at the next week, right? These are the kind of charts that professionals trade. I like charts with big ranges. And by the way, I am starting to cover more of the small caps in my live trading room now, at long last, because now they're finally worth trading. Now we've got charts like this guy, PTI. Do the math on how much money you could have potentially traded. I was not trading this one. Pisses me off. I was not trading one of those coulda, woulda, shouldas, but like Tony Robbins would say, don't shit all over yourself. Coulda, woulda, shoulda. This guy ran from $3 a share all the way up to $9 a share. It tripled in a single morning. Boom. On high volume. One could have made a boatload of money. Now remember, one of the patterns I teach you folks is that oftentimes you see a large candle day followed by a flat candle day. This was a good example. And why I generally don't like Fridays, because Fridays often suck. Mondays suck more. Tuesday, Wednesday, Thursdays, like Thursday, much better odds for trading. That's why I only run the room Tuesday, Wednesday, Thursday, because volatility tends to be best. See, this is a big candle day on Thursday. A little bitty flat compressed candle day yesterday. So they don't know what they want to do with it. I'll wait and see. I want to see if buyers come in or sellers outside of this congestion box. It's likely to gap. I'm going to bet gapping down come Monday, but we'll see what it does. Anyway, these are the kind of charts that dreams are made of as a trader, right? You could tell I'm in a good mood because I love trading. It's what I do. And so thank you all for being here. What else is worth a look? CRON. I had a buy stop order at 1010. Dodged a bullet. I didn't buy it yesterday, but this guy ran from 11 down to 960, right? And on the longer term chart, you can see it's got a lot of up and down price action to work with. One of the reasons I'm mentioning all these charts for you is to give you a good heads up in terms of tradable charts that make sense to follow if you're an active trader. My edge, my clear advantage as a trader, one of the reasons why, at least I love my trading approach, it's been very good for me, is because I like to trade many different instruments and throw a lot of darts at the market on small, some might say ridiculously small chicken stuff type trades. That's okay, because my cost of being wrong is extremely small. That builds confidence, that minimizes risk, and that gives you more shots to make money as a trader. How many of you agree with me that this is worth exploring, this whole small size or small ball trading approach, where you don't have to do 188 trades like I did this month, but at least expand the scope of the number of trades you take on initial small size so that the upfront risk is minimal? Because it's all a numbers game. I'm still wrong over 50% of the time, and I've been doing this 20 years. What makes it up is you scale into the winners, and you take really itty-bitty, ridiculously tiny stops on the losers. That's what gives you permission to trade correctly. You do not trade thousands of shares on 2 or 3 stocks and over-leverage your risk. There's a really good YouTube video, and by the way, I highly, highly recommend, if you trade options, the 3 best guys to learn from are Larry McMillan, Price Headley, and Tom Sosnoff and his crew over Tasty Trade. You have my word on that. Those are the 3 guys I've learned the most from. Sosnoff is brilliant. I've learned more from that guy's YouTube videos than any other educator in the world. He's the real deal. He's the Thinkorswim co-founder and former floor trader, and he doesn't talk about charts. He talks about volatility and risk management intelligently. And he says trade small, trade often. That's what I do. I say trade wide, not deep. Anyway, learn from real traders. It makes a difference. Anyway, look at the point potential in this guy. I've probably had a bit too much coffee this morning. I apologize if my talking is a little animated, but I'm excited. I am so much a market chameleon. My personal energy level rises when the market volatility rises. I've been doing this for 20 years full time. It's what I do. When the market's sleepy and quiet, so am I. When the market's hot, so am I. So I love this market. Look how much money you could make if you get a long or a short breakdown. So many of these have short sale restrictions because of volatility. So you're not likely to get off a winning short, but on a pivot, on a short squeeze. I mean, look at this guy. I called this long correctly for my traders in the live room on Thursday. That was our trade of the week. And then short on the way down. This guy ran from 11 to frickin' 18. Now I got us out early. I like to sell into resistance. I don't get the bottoms and the exact tops. I get the chunk in the middle. Classic day trading, but I called it long here. Anyway, if you get another spike like this, do you think one could make some money? Just saying. I'll be trading this next week myself. One that I did not trade successfully despite trying yesterday was this China Ceramic something CCCL. What I liked about it was the range. From 6 to 2, a 4-point trading range. And I tried to buy bounces and got stopped out along the way down. So I freely admit I'm very transparent. When I screw up, when I F up my trades, you'll hear about it. When I make winning trades, you'll also hear about it. Anyway, I'm still going to trade this next week if it bounces. We'll see. We got so many great charts. One of the things I want you to start giving some clear thought to as an active trader, this one is ABX, Barrick, the gold stocks. I'm currently long this one, and I'm going to scale in if it breaks. I'm going to wait till we're 14 and a quarter or so. And that's as long as it takes me to decide how to trade. Find charts with big ranges, play the field. Any questions so far? We got just a minute till the week ahead. Excuse me while I drink a little coffee here. I love hot black coffee. That's been my breakfast of champions for 20 years. Hot black coffee and a whole wheat bagel with, I can't believe it's not butter. I can believe it's not butter. But the point is it tastes good. Let's see, Louise is saying, I like the idea, but scared of shorting. Yeah, don't short. I've just been going long this last 3 weeks. I've just been going long. My only trades have been long because I can't go short in a SEP IRA, and that's what I'm day trading and swing trading. So yeah, I don't go short. Chinese stocks went nuts on Wednesday and Thursday. You are right. Yeah, absolutely right, Ben. Good point. China stocks, and also the FTSE ETF, yen and yang, they've been nuts too, so. Is a question, good question from Mike. Is there a difference between day trading and intraday swing trading? The only difference is the duration of time. Classic day trading, like I've done since the 90s, is open range breakout trading. A topic originally coined by Tony Crable in commodities trading back in the 80s. But the point is, that's for like a 5 to 8 minute scalp from 9:35 to 9:45, or 9:35 to 9:40, or 9:40 to 9:45. A quick 5 to 8 minute open range breakout scalp. The alternate way to trade is an intraday swing, where it's still a day trade because you're going to cash at the end of the day, but you let it work out longer. So for example, if you did a scalp in Barrick, you just get a little bit. If you waited till the end of the day, you could have got a lot more. So those are the type of patterns we look for. All right, great to see so many of you here. Let us continue on with our official broadcast. So much to cover in so little time. I wanted to thank all of you for being here. Sincerely, it means a lot to me to have a huge audience. Great to see all of you here. Let's get underway with our regularly scheduled session for today, Saturday, October 20th. So, good morning, active traders, and welcome to Trading Week Ahead. I'm Ken Calhoun, your humble host, coming at you live straight out of Colorado on Saturday, October 20th, 2018. Markets have been nuts. It's been an outstanding time to be an active trader. I love trading, and I like traders. As always, all information is for educational use only. I'm not making advice about what to buy, sell, or hold, and by watching this video, do not make actual trades. Use a demo account only if you need to. Quote from an Australian late great trader, Reen Rivkin: I hate weekends because there's no stock market. Give me an eye, because I wish I could be trading this morning, right? But I'm not. I'm here, but I wish I could be trading this morning. I hate weekends because there's no stock market. Just a quick tip too, I do have my Trade Mastery coaching. Price increase, big price increase is coming tomorrow. Like a valuable stock price that's going up. If you guys are not yet in my coaching program, it's currently under $1,000. That'll change come tomorrow midnight. But for now, you can still get in Trade Mastery coaching. We've only had our first of 6, actually 7 total sessions last Tuesday. So you're not too late. We're still in the early stages of it. Do register for TradeMasteryCoaching.com, and you can get me on the phone for half an hour. You and I can talk on the phone for 30 minutes at the end of the coaching events. They're every Tuesday webinars at 7 p.m. Eastern for the next 5 weeks that we're going to be doing those. And we also have a session coming up in January, a recap session. And we will be looking at what's hot. And Entries and exits is our current topic that we're looking at next week. So you'll be learning with me. Be sure to join. I'm a real money trader. I'm the real deal. I'm not some BS con artist asking $3,000 and showing PowerPoint slides like other coaches. I'm asking less than $1,000 and giving you examples based on current real money trades I'm doing. So that's the difference. I'm the real thing. Play it safe though. I'm not the real thing trading thousands of shares risk foolishly out of the gate. I play itty bitty trades and then only add to the ones that prove themselves. Much like going on a first date, and deciding with the stock. Right? I'm dating the field. I used to date a lot. Don't hate the player, hate the game. To quote Will Smith, that is. But the point is, trade like you're on a lot of dates. And I guess nowadays the kids use cell phones and they use that. I forgot the name of the app because I don't use it. I was happily married 20 years to a wonderful wife from Japan. But the point is, you go out on a lot of first dates. The ones that don't work out, you don't call her back. And the ones that do work out, you go on a second date or you scale in. It's very, very much like that in trading. There's a point of diminishing return. You probably don't want to trade or date too much, but most of you are probably over trading, getting married too soon, and fudging up your trades. So, coaching tip of the week, trading momentum part 3. Look for pivots after sharp drops. And let's take a look at, the reason I came up with that one for you guys is, this is a sharp drop in Yandex. And this is one I was trading yesterday. By the way, how many of you like it that I actually show proof that I'm really trading? That was your number one. I had over 500 responses on my survey this year. And that was the number one request, as you guys said, you want to see more recent real money trades I'm doing. So granted, they're initially small. That's the trick. Make sure it's cheap. Take her out to McDonald's, not lobster and steak the first date. Maybe not McDonald's, but they've gotten better. Their coffee's not too bad. But anyway, my point is, I love this stuff. Yandex, I bought this puppy at 25. I got filled at 25.66 right here. So it's not the exact bottom, but pretty damn close. That's a 20 share swing trade, not a day trade. I do both swing and day trading. Lately, this past week, more day trading than swing trading, but I do both. And anyway, so I bought right there. That was a good entry, assuming it doesn't gap down against me come Monday, which it might. And if it does, I'm only 20 shares deep. So even if it gaps 5 points, which I doubt, but if it gaps 5 points, I'm only down 100, right? I'm not down thousands of dollars. So that's my edge. That's my secret sauce, is trade wide, not deep. As I've been saying at money show events where I've spoken for the last 15 years. You want to play it safe. As an active trader, you owe it to yourself to trade charts that make sense. That's a quick tip number 1 too, is trade the extremes. Trade the extreme volatile charts, because there's a lot of them out there. So don't screw up by trading choppy charts. Why settle for that? Okay, our S&R levels. You saw how good they've worked out. I asked you guys last week if you thought the market was going to go up or down, and 2/3 of you said up. I'm going to repeat my question. Hint, I'm heavy short the market. But let me ask you, and I was right. I said the market's going down, baby, and I was right. But you guys, 2/3 of you, when I asked, a full 2/3 of you thought the market was going to bounce. No, Sparky, the market is in trouble. Unless it breaks over the 100 SMA, that is. If we get north of 28.30, all right, I'll give it to you. But we're in bear territory now. How many of you think the market's going up? How many of you think this market's going down, baby? We're going down, downtown. Downtown Julie Brown. My support level is 27.45. I'm being a little more aggressive, and that's what's that, a 5-day low? 27.45. Heavy shorts obviously under 2,700. That's the floor of the market, 2,700. But I'm going to start doing momentum shorts by going long the inverse ETFs, like the VIX ETNs and QID and SDS, which I'm currently long in because they're going up. Most of you are saying down now. Okay, that's good. And traders saying proof is good. It's called moving on. That's true. That is correct. Thanks, everybody. You're right, Srina. You're exactly right, Srina. There's markets, and I heard this first from my longtime colleague Steve Nissen, who's absolutely brilliant. If you're going to learn candlesticks, learn exclusively from Steve Nissen. Everybody else fudges it up. They make incorrect calls. I've watched all the other candlestick trade educators out there. Every single one has made at least one screw up that I've seen in the video. Like they'll say it's a doji top. There's no such freaking thing. The shooting star reversals and bearish engulfing reversals. Anyway, learn from Steve Nissen. He's genius. He knows his stuff. Anyway, the point is, what he taught me, Wall Street saying is what Swineth just said, is markets take the elevators down and the staircase up. You know, or the, what do you call that? The escalator up, slow up. Anyway, markets collapse faster out of fear than they bounce out of greed. Everybody's nervous long if they're still long. Okay, and I'm still going long in isolated charts, but mostly in the hedges like Barrick and the gold stocks that are going up like this, right? Play it smart. Play it safe. Anyway, so my tip is do trade volatile instruments. These are some that I was trading this past week. YNDX, Momo. I bought a little bit. I think it was a little early because that looks, it's an overall horrible chart, right? Look at that. Boom. Next stop, it might go down to 10. We don't know. But just like I bought a little bit of American Airlines and it looked ugly and I correctly got near the bottom. American Airlines was looking really fugly, but it bounced up early last week, right? So it's going back down. I'll stop out if it gets to scratch. I will scale in if it takes out new highs. Now, one of the tricks is if you're going to trade pivots, it's ill-advised unless you've got a ton of experience. You're best going just with directional in-trend continuations because that's where most of the smart money goes. But you can, if you thread the eye of the needle correctly, you can trade instruments that have big volatile ranges on pivots. Like IGC, I bought here off the $3 whole number support for a swing. That's an ugly chart, right? 15 down to 3. Next stop might be 50 cents. We don't know where it goes from here. But the upside potential, that's one thing I want you to visually keep an eye on. Think of the markets like you're in an Indiana Jones adventure movie. I even got a hat. I'm a big fan of hats. As you may see my jazz videos at www.tradingjazz.com. I play tenor sax. But look at it like you're Indiana Jones in an adventure movie, and you're out there to try to capitalize on as much volatility as you can. You can hum along, feel free to hum along the Indiana Jones adventure theme with me. Bum-ba-dum-bum, bum-ba-dum, whoosh-pa, kick the market's ass. Anyway, back to our regularly scheduled program. I'm in a good mood. It's not over trading if you're making money. It's under trading if you're taking too few shots and taking big stop losses. You got to learn the difference. Here's a small cap from my small cap advisory, smallcapscans.com service, Fred. I have no idea what Fred is, but Fred, congratulations, Fred. You won the Price is Right 2 to 3 range. That's a 50% gain in just a couple weeks. Fred looks good for small cappers, so if you guys are small cappers, keep an eye on it. Intraday, PTI, one that I wish I had traded Thursday. I will trade it next week if it moves. It went from 3.5 to 10. It only tripled. It went sideways Friday because Fridays generally suck for traders. But Thursday was a hot day in PTI. That's one to keep on the radar. PLAG got halted yesterday, but it went from 3 to 11. What a range. What a big range. I was keeping this on the radar because I was expecting it to unhalt on a gap down and then do a mean reversion pivot, and I was going to play it long in here. Didn't do that. No such luck there. It got halted, and that's it. Game over. So we'll see where it goes on Monday. But that one's worth keeping on the radar. CRON is one I was looking at to trade. I had a buy stop order in at 10.10 if it pivoted long, but it didn't. But we'll see if CRON does something next week. A nice big range. It spiked up to 11.5, dropped down to 9.70. Do you start to see the theme of these charts? Either they're going up sharply or going down sharply, and they've got lots of points of trading range. That's my edge as a trader, is I trade charts with big honking ranges with lots of, that's called volatility, a lot of implied and directional volatility with an increasing volume on a pivot or on a breakdown continuation. When I got stopped out in yesterday was triple CL. I was trying to trade this on a bounce. And again, the range is 2 to 6. So if you put on a small ball trade and scale in, You got at least up to 5 was my exit. 480 or so was my exit target. If it got in there, I was going to scale up, but it never came to pass. So I got stopped out on this one yesterday. What I'm currently still long in, we take a look at our commodity hedges. We've got longs in gold, right? Small caps are taking it on the chin. Small caps are getting hammered, and gold is going up. That's a sign that the market is starting to break. Now, we may have the mother of all rallies next week, and if so, my longs will probably do well, and my shorts not so much. But I take tight stops if they don't work out. Barrick looks really good. I'm currently long this for a swing trade. I'm not long Newmont. I'm not long any of these other instruments, the Nugget. It's still my official call. It's one of my Swing Scans picks. And Swing Scans members, congratulations if you got it last week. Like I called it, it continues to run up. Dust and JNUG are also two good opposites attract ways to play gold, right? Dust, I would play the pivot. Again, not a trade recommendation, but north of 31.50. And JNUG, I'd play the breakout if it breaks north of 10, say 10.20 or so. Good stuff. Oil's been dropping quite a bit lately. I will play oil. I'm interested in oil on pivots, by the way. This past year, we've had a lot of what's called mean reversion plays. It's been the year of 50% retracement bounces, right, on both swing and intraday trades, where something runs up, it pulls back down to half, and then bounces. That bounce is usually a good play. Or if it does a gap fill, it gaps all the way up, it fills the gap to the previous day's high, and then bounces. That's also usually a good play. I'm not a big fan of anything less than directional breakouts. It's what I've spent my life the last 20 years trading. But we adapt to the markets. And so that's why I went long on Yandex down here yesterday, because I recognized extreme, and also recognized, by the way, another quick tip for those of you who are swing traders. This is a specific advanced play. You'll often see, I expect that is what? How many people think this is A, short covering, or B, speculative bounces? I'm a speculative dip buyer on the bounce. But what do you think most of that institutional, the money flow was on that? That's a tip going into the weekends, oftentimes following major epic sell-offs. Last part of the day, Friday. Here's another quick tip I've never shared anywhere before, but it's one of my bag of tricks of the advanced level that I teach in my coaching program that you guys need to register for if you've not registered yet. Hint, you can go to trademasterycoaching.com and sign up for my coaching program before price goes up tomorrow night. And I will. And you know me, if you've been following the promotion this last few weeks, you know that I never repeat or extend deadlines. Like a valuable stock price that keeps going up. When I start off lowballing the price, so it's a great value and I get a lot of people in, then I don't really care if anyone else registers. I got over twice as many people subscribed to coaching as I thought would, so I'm just going to arbitrarily raise the price because I can, right? But I give you advanced early warning notice. You can register right now at Trade Mastery Coaching and get access to my coaching program for under $1,000. And for that, you get 5 more live 1 hour plus webinars. Last Tuesday's ran an hour 20 minutes. And you get to ask me personal email questions, at least up to a couple a week. Plus get me on the phone for 30 minutes come December, January, and ask me more questions. Or we can do a live personal, just you and I go to webinar, and we can pull up your charts, and I can give you some very candid tips on success, lessons learned, if you got stopped out, why, and what were some early warning signs that could have kept you out of trouble. So last Tuesday's session, we had so many great questions, we stayed late. It was an hour, 20-minute session, and I am here at your disposal for coaching. Anyway, the point is, I bought here proof 25. I got filled at 25.66 a share. Do follow my Twitter feed, twitter.com/Ken Calhoun. I've been posting daily updates on live real money trades I'm in. You guys talked in your survey. You said, Ken, you're showing tax return from 10 years ago. What have you done lately? Okay, that's what I did yesterday. How's that for lately? So I respect your folks' wishes, and I will be aggressively trading and sharing with you examples of, like trades that I'm currently in and how I'm trading it and all that kind of stuff. So here's a bunch of itty-bitty greens. Here's a good example of a good learning point. Here's a screen cap from yesterday of some of my green trades I'm in. Now notice please, the dollar allocation per trade is nothing. They're $200 or $300 per trade. They add up to a few $1,000s, but I spread the risk. That way if the market sells off and these guys all stop out, it's not going to cost me much. They're currently in the money just a little bit, right? That's my edge as a trader. And if you're interested in learning this small ball approach, join my coaching program and I will answer detailed questions for you. You have my word, it's the smartest way to trade. It's common sense. Ask family or friends or coworkers. Hey, I was watching this one guy who was saying I should, competitors or something, saying I should trade thousands of shares of cheap stocks and try and scalp nickels and dimes. Is that a smart approach? Derp. Nope. Those of us who've been trading for over 20 years will tell you, spread the field. One of my colleagues, a broker from years ago, a Wall Street broker, he said it's called spray and pray. It's kind of what you do. You spray out lots of order folks. You hope for the best. You scale into the ones that work out, and the ones that don't, like your day's gain or loss, if it's $14 down, who cares? I mean, the gains too, kind of who cares? That's why I'm not selling them yet. But when they start to work out, I fully expect half of these trades are going to screw me. I fully expect half of them are going to stop me out. I don't care because it's cheap. All right? The ones that do work out, the goal is to make the wins outdo the losses and scale in so it makes substantial wins. So I may be in trades, these are small share trades. Just all these are under 100 shares, right? I may be in 200, 300, 400 shares by the time all said and done or more, but not off the bat, not off the front end. And you have my word, that's an intelligent way to trade the markets. All right, I'm about out of time. I wanted to thank all of you very much for being here. For currency traders, the dollar CAD is the best. Weakness in the Canadian dollar, which just legalized pot last week. National Highway Safety tests show that crash rates are up over 5% here in Colorado after legalizing pot. It's a bad idea, but anyway, and just random Canada thoughts coming to mind. They legalized pot, as one of my traders, Barry, mentioned to me last Wednesday the 17th. So the pot stocks are going bananas. And I have a special cannabis pot stock episode that I added as a bonus to the coaching program, which you may want to register for. But anyway, this is the US dollar against the Canadian dollar, and it looks strong. So weakness in the CAD is the strategic tip for the currency traders. And if you do trade Forex, be sure to join my forexvideos.com site that I run with my colleague Peter Bain. All right, well, that about does it for this week. I've got to wrap. Any quick questions before we run? And Mike's saying after the midterm elections. Yeah, watch after the midterm elections. That's going to be a market-moving event, right? And if you want to do well as a trader, you've got to be on top of the right charts intelligently, focused in a way that actually makes sense. So I hope that I earn all of y'all's trust the right way. I grind. I'm not a Hail Mary pass 3,000 share trader. My goal, though, my stated intention, my goal is to work myself out of this business by becoming much larger share size and spread the risk wide. So my goal is to continue to trade more actively and start trading more aggressively and doing extremely well. And I will document my progress for you guys. And for those of you who are fortunate and smart enough to be in things like my coaching program and my alert services and swing scans, you can join me along the way. Ultimately, I want to work myself out of this business. I've been doing it 20 years. I want to get back to full-time trading like I was doing back in the 90s. I've got such leverage, though. I have so many people that buy my stuff. I thank you for that. But my goal is to not go through all the hassle of running a business. I'd really rather not run the business. I'd rather just trade full-time. That's the God's honest truth. But I make so much money from my trading business, it's worth doing. So, because you guys are honest and you're loyal and you stay with me, and I appreciate that. So thank you for your loyalty. I like to call it straight. When I have good days or bad days, when I have stops, when I have wins, when I have break-evens, which is a lot, try and teach you guys what I learned. My lessons learned is what my business is all about from actual current real money trades. This is ABX. Right, Trey, I agree. Trends your friend. Is that a De Bono hat from Andrew? No, this is a badass hat. I love it. It's a Connor, Connor. It looks better in person than on the camera, but turn like this. Model hat, like Indiana Jones. This looks great in Colorado, so that's where I live. I live in the wild, wild west. Anyway, I've got to run, gang. This is backwards, so I gotta visually do it. But yeah, it's a good. I got it on Amazon for like $30. Trey's saying we like bad ideas in Canada. Yeah, be careful, all of you Canadians, this next year or two. Colorado, it's nuts. People are driving like frickin' bonkers here because we got all this medical marijuana tourism and potheads move here from around the world to live. It's not good. The only thing that's been the silver lining is the real estate prices have gone through the roof. So my house is worth a lot more than it was. But other than that, it's not safe. So Lou's saying if you do $10 a trade, yeah, I'm using Fidelity, and still it's expensive at $5 a commish. I'm used to using Interactive Brokers, which is like $2 a commish. So I do recommend Interactive Brokers. But Fidelity, I've been using the Active Trader Pro workstation. It works great. It's a really, really well thought out program. So it's only five aside in that. Thanks, everyone. I've got to run. I've got just a couple of minutes. Mark's saying what happened at 12:30 with the stock you're showing. Not sure which one you're talking about there, Mark. Don's asking, do I teach trading options? Not yet. Not yet, but that's coming. I want to practice. The thing is, with options trading, it's a lot trickier than it looks because you got time decay and premium to balance against price action and volatility. And oftentimes the mistakes you can make, whether you're doing, selling puts or buying calls or doing directional trades or buying or selling debit or credit spreads or butterflies and iron condors and all this other stuff I've been learning the last several years, it's tougher to get consistent with options trading, just like it's tougher to get consistent with penny stocks. So I'm still trying to navigate the choppy waters and figure out a process that works. So when I have it, you'll be the first to know. Well, thanks, Long, saying thank you very much for your help. Have a good weekend. You too, man. Appreciate it. Oh, thanks, Dave, saying I'm a fun guy, which makes my training even more fun. Yeah, I want to keep you guys engaged. Adversity demands action. And one of the things that I think if you're still struggling as a trader, I hope that I can help you with my lessons learned. I've learned a lot trading millions and millions and millions of dollars, as much as 4.9 million in a single year. I did 188 trades this month so far in just 15 trading sessions. That's a lot, and I've learned a lot from that, and I hope that I can benefit your own personal trading by making course corrections and a duck or weave, thread the eye of the needle. Some minor fixes can make a major difference in your trading if you know what to look for and how to trade it. So it's my sincere hope that you guys make it. I hope that I can be part of your success and at least initially avoid large failures. The main first goal is to avoid big stops and then start to turn the corner towards to where you're making as a goal becoming a break-even trader, and then start small wins and then larger wins. And that's the progression that you want to go for as a trader, which may take many years. If your experience is anything like mine, it will take a lot of years and a lot of hustle and a lot of grit, a lot of spirit, a lot of determination, a lot of testing and patience to make it as an active trader. So I'm Ken Calhoun. I'm done for today. You guys take care. Swing scans coming up next. I've done a lot of trades. I hope I can help you. Be sure to join my coaching program. I will honestly raise the price again tomorrow at midnight. Actually, it'll say this offer is closed at midnight tomorrow. I'll keep it closed for Monday and Tuesday, then reopen it, or maybe I'll reopen it on Tuesday with a higher pricing. So do register for my coaching at trademasterycoaching.com for more. And again, you can certainly feel free to try out my live room at tradingtheopen.com, my swing trading service at swingscans.com, and I'll see you guys next time. Bye for now. I've got swing scans coming up.